Hello everyone. We are approaching the end of 2022 with the commodities trading mixed as traders await the last US CPI print and FOMC meeting for the year. Hi, I am Ravindra Rao from Kotak Securities Commodities Research Desk, and I welcome you all to the weekly commodity audiocast that guides you through the ups and downs of commodity markets with the event updates along with trade levels. In this edition, we'll be understanding the factors and levels that needs to be watched, as it can be the last volatile week before the trading volume shrinks due to the year-end book closure. It was a mixed week for commodities as well as for US dollar index, as some encouraging economic data print from the US supported the recovery in the American currency and capped commodity gains. US 10-year Treasury yields closed about 3.50%. On the macro front, the ISM services PMI and factory orders came in better than expected, supporting US dollar index recovery. Positive economic numbers gives the Fed more room to keep hiking the interest rates longer than previously expected. Chinese annual inflation witnessed a drop to 1.6%, which came in line with the expectation. While the US annual producer price index, that is the PPI data, showed some softening of inflation when compared to previous figures, it was mildly higher than the forecast. On an year-on-year basis, the PPI increase moderated to 7.4% as compared to 8.1% in October. The PPI had witnessed a peak of 11.7% in March. Month-on-month PPI for final demand increased 0.3% during November, the same as in the prior 2 months. The extent of the improvement in inflation is not enough for Fed to become dovish. However, as the economists believe that CPI is a better measure of inflation, next week's US CPI data will be an important market mover, as a softer print might support the belief that inflation is actually moderating. Immediately following the US CPI data, the Federal Open Market Committee, that is the FOMC, will conduct its two-day meeting. Will conclude its two-day meeting. This will be the last for the year. Although the consensus is high for a 50 basis point hike by the Fed, the events will be key to understand US rates heading into the start of the next year. Thursday, December 15th will also be watched. I think it is December 16th. December 15th will also be watched for important monetary policy meeting by European Central Bank and Bank of England. As other major economies are witnessing softening in the inflation numbers, the numbers are still at decade high levels. Having said that, the central banks apart from Fed might maintain their hawkish stance. The dollar might weaken against the other major currencies. So the focus for the week would be on the CPI print as well as the central bankers meetings and their forward guidance. On the price action front, the US dollar index is nearing the 52-day moving average support near 103.56. Support is near last week's low of the immediate support is near the last week's low of 104.37. A break and close below that might pull it lower towards the mentioned support of 103.56, which might be which might be a good demand zone, as it is the 252-day DMA support. Coming to commodity specific, precious metals traded mixed in the previous week, with COMEX gold ending pretty much flat above $1,800 an ounce, whereas silver continued to outperform gold with a gain of around 0.83%. On the MCX, the gains were higher in both the metals, as the Indian rupee depreciated against the US dollar by around 1.29%. It will be a crucial week for the precious metals, as the US CPI print followed by the FOMC meetings will drive the prices. A moderate CPI print would be negative for gold, as that increases the expectation of a dovish Fed. However, any surprise from CPI would be dollar positive, and a sharp short covering in the American currency and profit taking in precious metals can't be ruled out. On the price front, COMEX gold is still holding the double top resistance near $18.25 per ounce. A sustained break above $18.25 per ounce on closing might push the prices higher towards the next resistance near $18.84 per ounce. Support near 1778 per ounce, below which we can conclude a temporary top near $18.25. On the MCX, support is pegged near 53,670 and possible, which is a possible demand zone. Reversal support near 53,460. Sustained close below 53,460 would indicate a short-term top as the price might enter a year-end consolidation phase. In case of COMEX silver, price has been consistently trading above the support near $22.50 per ounce. Having said that, the bulls might target the next resistance near near $24.20 per ounce, followed by $24.60, which is the falling trend line resistance. On the flip side, a break and close below the support near $22.50 would change the trend to neutral. On the MCX, the next level the bulls might target would be 70,660, provided the support of 66,000 holds. A break and close below 66,000 would trigger consolidation in silver prices. Coming to energies, it was a big drop in WTI crude oil prices last week. It was almost 11% drop from the previous week. It dropped to as low as $70.08 per barrel from the highs of $82.72, which was hit at the start of the week. Oil has been pressured due to the bearish factors like Russian oil price cap, Chinese COVID situation, and global recessionary fears, all impacting demand. However, the markets are completely ignoring the easing of COVID-related restrictions in China, the threat of Russian retaliation in response to the price cap, chances of OPEC Plus cutting production to maintain a demand and supply balance. Additionally, prices trading near the price band of $72 to $68 zone, where White House has said it will buy oil to restock its strategic petroleum reserves that has dropped to 40-year lows. Having mentioned all the possible bullish triggers and limited bearish fundamentals, we expect limited downside in crude oil as any of the bullish factor might, as mentioned, might trigger a sharp short covering that might very quickly push prices of WTI crude oil back above $76 per barrel. On the price front, WTI crude is approaching the immediate support near $68 per barrel. That will be followed by a strong 252-day moving average support near $64.60 per barrel. So any drop towards $68 to $65 might be an attractive zone for the buyers. In case the price recovers from the lower levels, it might face resistance near $76. On the MCX, the price range for the week would be between 5730 and 6400. Finally, on the metals front, all except aluminium and lead traded positive in the previous week. LME copper prices on Friday touched their highest since June amid expectations that easing of COVID-related restrictions in China will help revive the demand of metals and give a boost to the economic growth. LME copper rose to the highest since late June, above $8,600 level per ton. Zinc was the best performer with a gain of more than 5%, whereas aluminium prices fell by 2.55% on the LME. Weak Chinese trade data fueled worries about demand from the world's top metal consumer, overshadowing the easing of COVID-19 restrictions in the country. On the price action front, copper prices are in a retracement mode after it fell from 814 to 601 level. Price is currently at 50% retracement near 708. The rise might stretch towards 722, which is the 52-day moving average resistance. However, a break below 683 would indicate a temporary top. So the extreme range for the week would be 683 to 722 on the MCX. To conclude, focus for the week would be on the US CPI print followed by FOMC meeting, as well as ECB and the Bank of England monetary policy meetings. Keep a watch on US dollar, as any surprise in the CPI print or in Fed's tone might trigger sharp short covering in the American currency. It can turn out to be a very volatile week. So we come to an end of this week's commodity audiocast. All the best and trade safe.